Yeah, it's your boy Crypto Blood, and welcome to another episode of my two Satoshis. It is December 4th, 2018. Let's get right into it, people. I want to give a shout out to my man, Make YouTube Great Again, for that song request. He's a serial song requester. Shout out to him. He always dropping the hot ones. Otis featuring Kanye and Jay-Z. This is a classic one off that Watch the Throne album. Man, I want that old Kanye back, man. What's going on, people? Hope you guys are doing all right today. Today we're going to be talking about Bitcoin and a whale. It looks like a whale moved $250 million from a dormant address. We're going to talk about what's going on. Is that another sell-off coming, or do you think, what are they doing? Are they buying alts? Or maybe even just going to a stable coin? Let's hope it's a stable coin and not actually exiting the markets. Or you could have some OTC business going on. Someone, a large purchaser interested in some Bitcoin. But we'll take a look at that article and I'll give you my two Satoshis on that. And then the second thing is Ethereum Classic. I can't believe this. Their development group has folded, guys. Ethereum Classic's dev group shut down shop, man. This is crazy. So we'll take a look at that article as well. But first, get over to cryptoblood.io. I'll leave a link in the description of this video. We still got that BitMEX algo going steady and strong. Up, we're still in the short here, but we're up over 240% year to date. All you have to do is set it up. We sync your API keys, and boom, you're off to trading with the BitMEX algo that I've developed. Get over to cryptoblood.io and check it out. I'll leave a link in the description as I stated. But let's take a look at this market cap. We're currently at $128 billion. Bitcoin's dominance is at 53.75. I think that's a little bit higher than where it was yesterday, creeping up to that 54%. Dominance is a barometer for, in my opinion, the health of the crypto markets in total. If Bitcoin's dominance is heading up, that means it's a flight to safety within crypto. So it's not a good look as the Bitcoin dominance percentage goes up. Something healthy, like during the bull run in 17, we had a Bitcoin's dominance, I think, of like 30 something percent, or high 30s or mid 30s. I can't remember exactly, but you kind of get the picture there. So I made a little pop upside down Bart Simpson going on here. But it looks like we may be retracing that right now. We'll see what happens. I'm still bearish. I got bullish after that pop. We broke that pennant there. But since we broke the line here, I am back bearish, guys. And so what I can do here, just as reference, we can start to draw trend here. And you can see we almost made it to that area. So yeah, I'm looking at this now as a new area of resistance for us. Okay, so we'll keep an eye out on this. I think we're going to go ahead and try to take out that 3,600 level again. And man, if we hit that and close below that, 3,000, here we come. Now I think, I'm hoping that 3,000 holds. That's my hope, because I remember 3,000 being a very strong support area. Actually is where we went. We touched 3,000 after breaking above 3,000, but we went up to like maybe 5,000 and a half, something like that. Then we had the Chinese FUD come out that took us back down. We touched 3,000 in a nice capitulation move, and on the touch of 3,000, we literally went from 3,000 all the way to 20,000 essentially. So if my memory serves correctly, 3,000 is a very critical point for us in the Bitcoin crypto markets. So we'll keep an eye out on that. First article out of Z Crypto, Bitcoin whales. Someone just moved $257 million worth of Bitcoin from a dormant address. It says here, the Bitcoin market is buzzing with speculation after the latest rumors that a long dormant mega Bitcoin wallet has come to life. This has been the recurring theme this year. The wallet, one that has been touted as one of the wealthiest Bitcoin addresses in crypto space, recorded an eye-catching movement of a cool 66,000 Bitcoins from it. At the current market value, the coins moved are estimated to be worth around $257 million, a really significant figure as compared to recent market volumes. In fact, this volume is even higher than daily transaction volumes of some of the world's largest crypto exchanges. The last daily volume trading on Binance recorded $205 million, while Bitfinex handled a $155 million volume. Now you can see why the latest BTC whale activity is causing a stir in the market. Interestingly, this address hasn't been active since 2014, and its current activity leaves crypto analysts and enthusiasts with more questions than answers. The article goes on to talk about how this low transactional fee for this move compares to your traditional markets. It says time and time again, cryptocurrencies have been famed as the world's cheapest means of doing business, especially when it comes to transaction fees. With traditional banks, you could find yourself forking out upwards of 2% on your total funds moved in transaction fees. With cryptos, the cost is in the thousands of times cheaper. For example, the transaction mentioned here moved a whole $257 million at a cost of less than $50 in transaction fees. Calculating in terms of fee percentages charged by banks, the amount payable if these funds were to be moved through a bank would be spine-breaking. Even at the cost of 1%, that would put your figure well above $2 million. However, it's not the cost of the transaction that's causing noises within the Bitcoin community, but rather the speculations as to where these coins were headed and how their movement could impact the market. If they were transferred to an exchange, the repercussions could be severe for the market, as its impact would be akin to a dump. Bitcoin price would take a dip and the whole crypto market would follow. However, it's possible that the transfer was made to OTC market spaces, in which case the secondary market on the exchange wouldn't be impacted. Crypto analysts have had a hard time discerning which way the movement was made because the sender made sure to use various SegWit addresses to make transactions harder to track. So, wow, there you have it. I heard someone talking about, I think it was Bix Weir talking about possibly it being a move to buy alts. Well, we all know that's not how the market works. Alts usually precede the move of Bitcoin, the major token. So you will see a rise in Bitcoin, not a rise in alts, then Bitcoin follows. So I'm about 90% sure, 95% sure this is not a move to buy altcoins. That has not been the trend in the past. So what I'm thinking is two things. One, they're selling. Two, they're selling to a person over the counter, which is a better scenario for all the people in cryptocurrencies. Or three, they're selling into a Tether, some type of stable coin, whether it be Tether or USDC, you name them. There's so many now. So I'm hoping that it is the latter two, either selling OTC or actually selling into stablecoin. If they're selling out of the market altogether over the exchange, which I don't think they would do, to be honest with you, because they wouldn't get great pricing. That's a lot of money to trade or move into fiat. So I'm thinking it's the latter two. You guys let me know your thoughts about that, though. That's interesting, man. We keep seeing this. It's a little concerning to see very old cryptocurrency or Bitcoin wallets becoming active again. What does this mean? Are people that have been in the game starting to see the writing on the wall, or what? What do you guys think? Let me know in the comments below. This one here is out of News BTC. It says here, crypto bear markets strike, Ethereum Classic development group folds. This came at a shock to me. While crypto's unbridled optimists have done their best to keep this market afloat, incessantly imploring Bitcoin investors to hodl and build. Never heard the build one. Their cries haven't stopped a key Ethereum Classic development group from unfortunately capitulating. Ethereum Classic's ecosystem lost key player amid market turmoil. After a multi-month downturn in the cryptocurrency world, which has seen $700 billion evaporate from the industry's market value, ETC Dev, an essential player in the Ethereum Classic ecosystem, has announced its closure on December 3rd, 2018. For those who aren't in the loop, ETC Dev is an Ethereum-centric development group launched 2.5 years ago, whose creation was catalyzed by the DAO debacle in 2016. Since the organization came into being, it rapidly became the face of the Ethereum Classic development community, lauded for its penchant for technological revolution and its ability to innovate. But now, as aforementioned, the organization has had to fold, purportedly due to funding constraints. Through a tweet, the founder and chief technology officer wrote here, "Unfortunately, the ETC Dev cannot continue to work in the current situation and has to announce shutdown of our current activities." This is crazy. It says here, although the ETC Dev executive cited a lack of substantial financing, this message comes just days after he released a Medium article lambasting one of his peers for being a Trojan horse for another team. Regardless, the fact of the matter is that Ethereum Classic remains heavily wounded after this occurrence, as the project lost its primary development team. Since the disheartening announcement from the Experienced Development Consortium, ETC has fallen by 9.4% to $4.61 a pop, underperforming Bitcoin by 5.7%. The team made it apparent that ETC Dev isn't the entire project. Instead, it was noted that Ethereum Classic is a consortium of like-minded innovators and teams, such as IOHK, ETC Co-op, and a litany of volunteers, it says. Aggregating its underlying bullish sentiment into a single statement, the showrunners behind the ETC Classic handle simply wrote, "Keep calm and build on." And then it goes on to talk about other projects. It says this recent announcement comes just days after Steemit, the company behind the somewhat decentralized social media platform that shares its name, revealed it was undergoing a business reorganization, purging 70% of its employees. That's crazy. I heard about this as well. The CEO explained that Steemit's top brass met amid worsening market conditions. It became logical that a staff restructuring at the private startup was necessary. Interestingly, Scott failed to divulge an exact headcount pre or post purge, making it difficult to discern how many were affected. But as I told you guys, I think in yesterday's video, they're hiring. Hiring in the crypto industry, blockchain industry in total is very high. It's near all to 18-month highs actually. So I think these are just casualties of this bear market. But I am very shocked at the ETC Dev decision to fold. And really, you guys let me know, where do you think this leaves ETC? I was a very strong proponent of ETC prior to the Coinbase addition, and I think it was more so for just that reason, for the addition of ETC to Coinbase. But yeah, I don't know, man. I think this is a bearish, in my opinion, for the organization, for the vision of Ethereum Classic, and I don't think it helps at all. This is definitely a few steps backwards in my opinion, but you guys let me know your thoughts about it. I would love to hear that in the comments below. I'm not saying it's going to zero, but if we don't have that main team behind pushing it and leading it in a direction, now we have to rely on another one of the teams to take its place, and that's going to push them back or set them back many months in development, where this is a fast-paced moving industry. So I just don't know what will happen with Ethereum Classic. Do you guys hold any? Let me know, all that good stuff in the comments below. And that's pretty much it. It was short and sweet today. Want to give a shout out to my man Make YouTube Great Again for that Otis request. Love that track. And that's my 2 Satoshis for December 4th 2018. Got to give a shout out to my dad. Happy birthday. Love you. It's your boy Crypto Blood. I'm out of here. Holla!